The Nasdaq 100 ended last week near the lows of the day with an inverse hammer candlestick. The sell-off was triggered moments after JP Morgan said they no longer expected a recession in the US. Optimism is beginning to creep in, with inflation falling, and it's widely expected that the Fed is done or almost done raising rates. You can see from this chart the soft landing narrative usually spikes before an actual recession hits. This occurred in both the dot-com, financial crisis, and the COVID pandemic. Whilst you can't really trade on this info on a daily basis, it does help determine whether we're approaching an inflection point. And it's something we've mentioned in the last couple of videos, that seasonality, along with sentiment, is pointing towards a weakness in the stock market. Back to the daily chart, and price actually gapped up over the weekend, despite the weak close on Friday. We can see price came back to fill that gap on Monday, which sits around 15,283. Price finished the day with a doji, highlighting indecision as the 40-day moving average held as support. We mentioned the 40-day acting as intermediate support in the last video. Tuesday saw price briefly break the 40-day after Moodys downgraded a bunch of regional banks, which hit sentiment and saw selling across the board, but price managed to finish the day back above it. Wednesday was the day price broke this area, ahead of the inflation report, with some report leaks pointing to inflation numbers providing to an upside surprise. Remember, we said that 14,960 to 15k is the backtest on the weekly trend, which is where price broke above on the 10th of July. We're now firmly on track for this after the 40-day was breached. Momentum is beginning to shift after Fitch downgraded the US last week, and now Moodys downgrading a bunch of regional banks and also had some big name banks on downgrade watch. Thursday was the main event, with inflation coming out slightly less than analyst estimates at 3.2%, but an increase from the previous month. The volatility continued throughout the day, with price confirming the 20-day as resistance before closing back below the 40-day moving average for a second straight day. Now, whilst inflation did come in below the expected 3.3% year-on-year increase, it's the first acceleration after 12 consecutive months of decline, and core inflation itself came in line with analyst estimates at 4.7%. If we compare the inflationary picture from present to the 70s and early 80s, we can see inflation had a second wave up before peaking. Could the same occur again? Is inflation about to climb higher again? One chart to keep an eye on is crude oil. Crude oil has been in a downtrend since confirming this key trend line on the weekly chart back in June last year as resistance. As oil is a big driver in inflation, the decline in oil has also helped bring down inflation. But oil recently has put in a bit of a low, 1 year on from the breakdown, which has seen oil rise to above $80 per barrel. If this continues, inflation will also tick up. That's bad news for tech stocks. This is likely to be a factor as to why the Nasdaq 100 fell despite inflation coming in below analyst estimates. Today we're seeing further downside after US producer prices came in above analyst estimates at 0.3% month on month. This reinforces the question as to whether we're about to see an increase in inflation, similar to the 1970s. In terms of levels to watch into the close of next week, the weekly trend line that we've mentioned in the last few videos is edging ever closer. Congrats to those that have stayed the course and played the pullback. That weekly trend line is sitting around 14,840 as things stand. Resistance is now the 40-day at 15,250. If we flip to the weekly chart, this pullback we're having is exactly that, a pullback. Big test will be the weekly trend line to determine the next move. Bulls should only be worried if that trend line is broken to the downside. Next week is quite a calendar week with US retail sales on Tuesday and Fed minutes on Wednesday. And we have earnings from retailers Home Depot and Walmart. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.